Hello guys, welcome to another section of my video. In today's video, I'll be breaking down AUD USD charts to the lowest minimum, okay, to the point where you'd have to take an entry to sell or to buy. Okay, so I'm going to do the analysis from the higher time frame all the way to the lower time frame, so that those of you that have been asking I should do the full video on from the higher time frame to the point where I take an entry. Today's video is basically going to talk about that, so stay with me to the end of this video so that you get a full understanding of this video. Okay, so this is AUD USD, Australian dollar versus United States dollar. This is the daily time frame. Okay, mostly I do my analysis from the higher time frame, that's the weekly, daily, and the 4 hour. Then I at times take an entry on the 4 hour, or I go lower to the 30 minutes or the 1 hour to look for an entry. Okay, so this chart, as you can see right here, I've done some analysis over here. All right, so the weekly is bearish, I know. Okay, so the daily, from the daily, each candle here represent a daily candle. Okay, so the daily was creating a higher high from all the way here and created an equal high with this one. Okay, it couldn't break this high. So what I realize here is that this trade could probably reverse. If you can see, you see that I've taken a trade here. Okay, I will talk about that one. So what I want you to focus is that we break a structure, create a high, create a low, break this high, created equal high with this one. Okay, but here we consolidated for some time and we started out. So upon seeing this bearish engulfing at this equal high, the next day candle, after this bearish engulfing candle, the next day I waited for the market to come to 50% of that daily candle, that daily engulfing, bearish engulfing candle. Okay, I waited for the market to come to 50% of that daily engulfing candle before I look for my entry. Okay, this one, remember this one, I didn't go according to this analysis. I was trading because there was a resistance level equal high that has been created here, and also I've seen an daily bearish engulfing candle. Okay, that is why I entered this trade to take this risk, which is 1 into 2 on this trade. Okay, at times you can use that. So you see the bottom here, market could drop all the way to the bottom here. If you see a rejection at the bottom level here, which is this support, you see an engulfing, an entry, and it matches your confluence, you could take a buy on that. Okay, but you have to know where to follow your strategy. Okay, so as we created this, we pull all the way down. That is why my take profit is equal to the low. Okay, because this does not mean that this market is probably is a downtrend. No, it does not mean it is a downtrend. It's an uptrend. Since it was here, my take profit was the low here, because if we break this low, meaning we are coming down. So that is why my take profit is just here. So as you can see, the daily dropped and we broke this structure by this candle. Okay, we broke this low, so meaning the daily has turned to a bearish market. Okay, that's why the daily we have a bearish market here. As you can see, it created a new low. Okay, so this new low that has been created, okay, you have to look for every angle of the market. I took my Fibonacci from this low to the high here, because before this low happened, the market was creating higher highs. Okay, so I took my Fibonacci from the daily low to this swing high. Okay, then I realized that market has approached 50 percent Fibonacci level, and it has touched my moving average, 50 moving average. Okay, so then I realized that, well, this market could probably push all the way to the upside to retest this what resistance level here. Okay, because the daily has closed down, telling us the daily is bearish. All right, so from there I went down to the 4 hour. Okay, I went down to the 4 hour to see what actually is happening on the 4 hour. So as you can see here on the 4 hour, this is the trade that I took. All right, this is the trade that I took, and you see, as the 4 hour to give me the same information that I needed. Okay, the same information. All right, so as you can see, we broke it. You came down, you break this one. So the 4 hour too is telling us that this market is bearish. Okay, so since this high created this low, this here becomes our high and this here becomes our low. Okay, so we wait. What we're gonna do is we wait for this high, either this high to get broken to the upside, then market has changed direction to the upside on the 4 hour. But if we did not break above this, that means we are still bearish on the 4 hour and on the daily. All right, so this could be a pullback, a retracement. All right, remember this could be a retracement, and if we take our Fibonacci level, we could say that, well, let's see what is happening on the Fibonacci level. Okay, so when you say the Fibonacci level, you see that market has traded above 0.61 Fib level. So what we have to do is we have to wait and see market drop back to 50% Fibonacci level and giving us a sign of sells. Okay, giving us a sign of sell before we enter for sell position. Okay, it could also be that market has come to tap into a demand or supply zone here, a supply zone here, right, for a sell. But so as we have analyzed the daily, the weekly, daily, 4 hour to be bearish. All right, so what I do is that I go to, and okay, let me take it this way. Since you've identified that the daily 4 hour is bearish, but market is approaching to the top side, it is not selling. What you have to do is that you go back, you go to the lower time frame, let's say the 1 hour. All right, you go to the 1 hour. You see, 1 hour is telling you what market is bullish. 1 hour is telling you market is bullish because when we created this low, we created a high and we broke this low. Okay, so meaning this is our recent high. Okay, and market has broken this high right here. Okay, this one too got broken, this low also got broken, creating a new low. So this is the new low, then this is the previous high. So we broke this high here, creating a new higher highs. Okay, so what you want to see here is that market should change direction. Okay, you know that the 4 hour, the daily and the 4 hour are bearish. So what you want to do is that you want to wait for the 1 hour or the 30 minute. 1 hour or the 30 minutes or the 50 minutes to change to bearish. Okay, to change something like this. Okay, to do something like this. So at this point, this is where you will be looking for a sell position. All right, this is where you'll be looking for a sell position because the 1 hour or the 15 minutes or the 30 minutes has also aligned with the higher time frame, that is the daily, the weekly, the daily, and the 4 hour are telling you market is bearish. So this 1 hour or 15 minutes or the 30 minutes also has changed direction. So as soon as it changes direction to start giving you a sell formation, then you wait for a pullback. So far as if it creates, let's say it creates an equal high here, then it comes down to break this low. All right, all the way here, breaking this one to then move back to give you a retest of this neckline with a psychological level. Then you should be looking for a sell entry at an bearish engulfing candle. Okay, you should be looking for an entry at a bearish engulfing candle. Then you will sell. So when you sell from here, you could target the recent low, which is the 4 hour low that I've marked out or the daily low that I've marked out, risking your whatever a pip that you risk, the recent high. Okay, so this is a perfect way that I can explain to you how to take a trade from the by doing analysis from the higher time frame to the lower time frame. So remember, When the weekly, daily, and 4 hour are telling you bearish or bullish, but the market is the recent market is moving to the upside. Let's take bearish for example. Everything is telling you bearish, but you see the market moving upside. Mark the recent high and the recent low with a line. Then if you are done with that one, see, you can use Fibonacci level to measure where the market is currently trading. Okay, so where the market is currently trading, you mark that place down. Is it above 0.61 Fibonacci level? If it is above that, wait, do not do anything. Just go to the lower time frame and be watching. If the lower time frame is creating a higher high on the 1 hour or the 30 minutes or the 50 minutes, wait for it to also change direction to bearish. Then you go in for a sell at that point. So that is it, guys. If at this point, if you haven't subscribed to this channel, please do me the favor by hitting the subscribe button and hit the like button. I'll be very happy for you to support this channel. Like the video and share it with your friends. So guys, that is it about the entry from the higher time frame to the lower time frame. Remember, always stick with your trading plan, and don't forget to watch the news, the fundamental that may be released before taking your trade, because the fundamental, as we know, also affects the technical analysis as well. But at times, most at times, 70 out of 100, the fundamental correspond with the technical analysis. So thank you guys very much for watching this video. I'll see you in the next one. Bye bye.